How's it going, guys? It's Ralph here from Beyond the Huddle. Welcome to this week's Bitcoin forecast. As always, we're going to get started by talking about the COT, the smart money, and how the asset managers are positioned. Then we'll move on to talk very briefly about the margin accounts, and then we'll wrap it all up with some price action targets, what our short-term level and long-term level looks like for this week and month, and then that'll be it. So let's get started. Okay, guys, so getting started here with the COT on Bitcoin. And by the way, a lot of you guys are asking where I'm getting the data from. You can either take it straight from the CFTC website at cftc.gov. You would click on commitment of traders, or you can find it here on Trading Stir. Or, of course, we have an indicator for it. We haven't released it to people yet, but we will be doing that in the future. As you can see here, the asset managers for this week, they actually increased 143 long positions. That's quite a bit from what we've seen here in the past. And also, they increased a very small amount of shorts, which is plus 34. This difference of 143 to 34 contracts between longs and the shorts actually increased our positioning long from 68% to 70.33. So if we go back to last week's data right here, we can see that the data gave us a 68.5% long. So we actually got more long from last week, which is a really good sign to keep us bullish in this market. So let's go ahead and take a look at what that looks like, when we pull up the indicators, right? So remember, the whole point of this, let's go to the weekly, because it comes in week by week. If not, the data will be off. We wanted to make sure that the shorts stay below the average now that we are committing to the long side. Because why? The asset managers went net long extreme, right? So it's not 50-50 they wanted to see. Our magic number is 60%. When they go above 60%, we want to see reasons why they would stay 60% or higher. The minute they start declining, then we got to start questioning, are they going to start to retest and challenge that net long to then go net short? So you can see right here, the longs, they went up. And you can see right here, obviously the net position above the average, so is the longs. And like I just mentioned, the percentage long is at 70%. So everything's fine in this world. Everything looks good. See, not much to talk about this week on the COT. It's just basically we're staying long. So let's move on next to the margin accounts. Okay, guys, so getting started here with the Bitcoin margin positions, we're going to take a look at the shorts, and I have some lines drawn out, and what I want you guys to pay attention is the fact that we just made a brand new all-time low in these shorts, and that's actually very important because there's two things that can happen. When you make the all-time low in those shorts, you'll either have a quick increase in the shorts because there's virtually no shorts open right now in the market, as you can see right here for Bitcoin, or they're going to just keep dropping and dropping and dropping, right? So it's more of a let's wait and see what's going to happen before we make some decisions, but we can take a look at the past and see what happens every single time and the all-time low gets made. So you can see right here, an all-time low was made, and then we had a rejection. Now, obviously, that's when the contracts first got released, but look what happened. You have a huge increase in those shorts. And then obviously, I'm not going to go through every single scenario. You guys can do that by yourselves. And again, this is BTC USD short on Bitfinex. And as you can see here, the important one here is that when we made a brand new all-time low, boom, then we took it out, it went up. We took it out again, that was that big leg higher. Now this increase in shorts happened during January 2020. We all know that January 2020 was a very nice move higher before we got interrupted by the COVID crash. And look at that. Why did the COVID crash happen? Or what's another way you could have seen it coming? Is because right here you were getting a discount buy of the shorts. So the shorts are at a discount buy and it does reverse. That means that shorts are going to be aggressively increased in the market, which should be bearish for prices depending what the longs are doing. So you can see right here that swing low, swing high, boom, it retested the previous all-time low that was right down here. It rejected aggressively off of it, and there you go. That's the COVID crash. You can see this right here. That was the October-November drop in prices. So again, right now it's just a very interesting time in price. As we could see, we spoke about last week. What we wanted to see was prices not go above the monthly and quarterly open. Why? Because if we wanted to be bullish because of the COT, and now that we've seen that they're back above 60% in their longs and everything's looking great, we want to see the margin positions in shorts go lower. And that right there is what allowed the market to keep, rallying higher. Again, My only concern right now is that a move higher would be a aggressive, 126% increase in these shorts. Now, although there's only 400 contracts opening shorts, it's actually not very many at all. We really don't want to see the short side being fed. Now, one thing that we can do here is we can go take a look at the longs, because the way we can think of it is, it's not just that the longs are at an all-time low. If the it's not just that the shorts are an all-time low. If the longs were an all-time high, that would be the perfect recipe for disaster for the market to drop. So if we look at this here, back when I was pretty bearish on Bitcoin, is because the longs were an all-time high. If there's too many people long in this market, the market will drop to hurt all those traders, right? So look what happened. The long position has been massively reduced down to about 50% of what it used to be. So you can, by that logic, deduce the fact. Remember, we had some sort of a discount zone here we were expecting the longs to hit. So I would expect the longs to go up a little bit, a decent amount, and that would fuel the current bull trend, the current market. Everything's going to get into euphoria. Then you're going to get to that point where there's just too many longs again. Where might that happen? Well, if we pull our fib here, we could, again, assuming this is the low, I don't know where the low is going to be at the moment, but let's assume the low is somewhere around here. That means that then we can predict that, look at that, right back to our quarterly open. If you look at this right here, right back to our quarterly open and monthly open is where we could potentially see some resistance in these long contracts. And that would mean that then that euphoria and that big up move that we're going to see in this market, you should be very, very careful as long as these shorts stay low, because then again you're going to have too many people long, no one short, and then someone's going to step in, a big whale, take out a huge short, and then wreck all those longs, and we're all going to get hurt. So with that being said, guys, that's what I have here for the margin accounts. Again, at the moment everything looks good for the downside. Just watch out and let's see how it reacts here at this all-time low. So let's move on to the price action next and wrap this video up. Okay, guys, just real quick before I move on to the price action part, I know I didn't want to really go back and spend too much time talking about historical with you guys, but just to really accentuate my point, right, just to really make you guys understand just how important this is, that the shorts are an all-time low, but that the longs are not yet at an important extreme. I want you guys to, again, think back to the COVID, and what did I just say? What you don't want to see is the longs at an all-time high or some sort of extreme high at the same exact time that the shorts are at an extreme low. So we already said the shorts were near that all-time low that had happened in July. Again, they tested it here, went up during January, which was still a move higher in price. So you can see right here, another telltale sign is that during that January move higher, look what the longs are doing. If you look on the left hand side here, the longs were going straight down. So that means that the up move that happened in January in prices was not being bought up. Okay, so that was being floated by maybe the spot market, right? Not the derivative traders, and that's really interesting, right? Why would the derivative traders that like to ape into any up move not be wanting to buy this specific up move, right? Someone knew something, and look what happened next. When you have this second rally here on the 2020 March move, right? That's the one we just talked about. At that moment in time, this was the previous all-time high in longs. So there you go. You have an all-time low in shorts. You have an all-time high in longs. What's going to happen, guys? The minute it goes below it and it reverses below this green line, that had already happened in January. It tried to fool you back in February, peeking its head above it on February 10th. That was the exact high of the market. Then the next week after that, it went straight below it. About a week and a half after that. And then boom, off to the races. The longs fell 54%. While the shorts increased 449%. So there you go. I hope I made my point very, very clear there, guys. Again, what I'm expecting now is, yeah, these shorts can reverse or consolidate or mess around somewhere around here, but until these longs get to some sort of an extreme, which again, if this is the high on these longs, then maybe they could just come back for that premium that we spoke about. And then that would be the quote-unquote, extreme in longs and extreme low in shorts. So let's move on to the price now, and let's find out what we can talk about here. So looking at price, we have, there we go. So looking at price, we have our monthly long-term level. Again, that's this purple zone. And the idea is that as long as you stay above the purple zone, you want to be a long-term buyer. Now, again, if you guys remember, this swing low, this swing high gives us that premium. So let me draw it out a little bit better here. So this, I'm sorry, it gives us the discount. So that's our discount, and it coincides right with this weekly demand. And not only that, but it also coincides with the support level of the monthly and quarterly. So if we want to be staying bullish this quarter and this month, we absolutely have to stay above that level. So let's take a closer look in price, and now let's figure out what other short-term levels we could potentially, reach. Now, again, because we just took out the all-time high, I really don't want prices. So let's go mark that out. Because we just took out the all-time high, I really don't want prices to fall too far lower. So that's the all-time high right there. And you can see right here, this is actually quite interesting, as you're going to see, especially with my levels here. But again, there could be that fake out move where, you take out the all-time high, if it falls below it, and then it drops to this level. Ideally, that's not what you want to see. That actually wouldn't be a very strong signal whatsoever. But at the moment, guys, if we go to my 4-hour chart, you already saw the long-term level, but if you look at the short-term level, we actually are below it. So the level for this week, I kept the one for last week at the moment, because as you can see, we used it as support here to start the week off, and then it led to this really nice rally. We took out the all-time high, then we rejected back below the all-time high. So when we rejected back below the all-time high, we used it as support here, we used it as support here, and we used it as support right before the week closed. Again, that's the only reason I'm going to keep it in. I usually don't like to keep them on my charts, the week after, but we could actually use it as some sort of pseudo support for this week. As you can see right here, that we're forming a swing low and a potential swing high. Let me get rid of this one right here. But again, if we want to look at what this week's short-term level is, it's definitely this one right here, which is, it also happens to be the all-time high. So I'm not in love with the fact that we're below it. What this means to me is, if I'm not in a position at the moment, I wouldn't take a position until we go above it. Okay, there's just too much risk. That would be a 4% move higher needs to happen for me to want to bet that Bitcoin is going to go above it. Because then the problem is, if I'm wrong and the market does fall, we can fall 3% to this level. That's the discount right back to the weekly open. We can fall 10%, or we can fall 20 or 30%. Now, again, I don't want to see this, Bitcoin fall that hard, but I've seen crazier things happen, especially after taking out an all-time high. So, you really want to see the structure hold here on Bitcoin, but at the moment, guys, if it was me, and I don't have any Bitcoin positions because I'm focusing on alts right now, but I would, if I want to take a position, I'll just wait for Bitcoin to break above this, and then I can take my position. That gives me a lot better risk than just, trying to front run the market when I know there's a big resistance above me. Now, you guys don't know what that resistance is, but maybe in the future we'll share it with you guys, and or in some sort of a course or something like that. But yeah, that's what I'm looking at here, guys. Again, not looking too hot just because we rejected the all-time high and now we're below our short-term level. But based on COT, based on the way the shorts look, everything looks macro bullish. The only question is this the moment when Bitcoin just consolidates so then the altcoins can run? And that's kind of what I'm betting on. I'm betting that right now that Ethereum's going to pop off because of the Ethereum Bitcoin crosspair. And I'm in some other positions right now. So again, keep an eye out for this if you guys are long Bitcoin or are wanting to get long Bitcoin. Again, we used last week's level. You can see right here we hit it 1, 2, 3, 4, 5, 6 different daily candles. That's pretty nice. And now we just have to break back above this one. There is a supply zone right here too. So again, it just adds to the confluences, and that's the premium of the zone. It adds to the confluences of just, being careful. So with that being said, guys, have a great day. Again, if you like the video, give us a thumbs up, share it with your friends and family. Stay tuned tomorrow. Misha's going to be going over some coins. I'm not quite sure which coins it'll be. Maybe CRV, maybe 1 inch, maybe Ethereum, who knows. So stay tuned, and I'll see you guys next week. Have a good day and peace.